Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular companies using fundamental analysis and provide advice that is truly unbiased and has no strings attached. Today we're going to talk about a company that I think many of us have probably used at some point or another and has gained a little bit more popularity over, I'd say, the last few months. Talking about American Airlines, ticker symbol here is AAL.
Can we say that stock just kind of took off with the stimulus package?
Well, I mean, it's interesting. You point out the stimulus package, and you got to wonder where everybody's spending their money now. I mean, you've gotten a lot of checks dispersed over this past, what do we call it now? About a year and a quarter, I guess we can say.
Jason, and I believe what's happened is that a lot of people use that stimulus to sometimes pay off debt, sometimes to invest in the stock market. Sometimes they've been saving that, waiting for the days when they can go travel. And those days are here, making the airlines a very popular investment or thought of investment for people that are thinking this could be a great thing going forward. But we're going to kind of share maybe some details that maybe put some caution on it for people.
Yeah, and it is interesting. I mean, I got to bring up the unemployment benefits, which of course are part of that stimulus package. I mean, it's not the stimulus checks that people get, but I do wonder. A lot of people are collecting those checks, not working. I mean, now that things are reopening, are they taking those payments, those unemployment benefits, saying, "Hey, I'm gonna go travel," and I'm not going to agree with all of that, but it is stimulating the economy somewhat.
And as an investor, you got to look where that money's going to go. So people are thinking, well, wait a minute, they got time off. They're getting a lot of money coming in. Let's go travel because things are open. So the airlines could benefit from this. The big question we want to know, is it going to be enough? Because this could be a one summer uh, flash in the pan for the airlines. And then after that, things taper off and people begin to lose money. We are long-term investors, like to buy businesses, not try to play the stock market.
Yeah, that's a great point too. You got to wonder what's going to be ahead for the years to come, not just this summer, because sometimes airlines they get way too much capacity because wow, we had so much demand, and then all of a sudden next year the demand's not as high, and now they have too much capacity, which can be costly.
And also, too, older guys like me, Chase, we remember that the market plans about 6 months in advance. There's some new investors that are trying to invest now. That could also hurt them if things go back to more of the norm, to where the market foresees out 6 months. Now you'd be looking at, this is July, you'd be looking at December, January, when things would be totally different. So you really got to be careful when it comes to investing. You hate to get stuck with a losing company based on a positive concept that just did not work out.
And don't forget, there's been a few airlines in the past that have filed bankruptcy and then reemerged, also known as reorganized. So just because American Airlines might be around years from now doesn't mean that they can't file bankruptcy. And I think we'll talk a little bit more about that as we look at the numbers for American Airlines, look at the balance sheet for the company, and actually kind of throwing you off here. I
So
am
what's going on? What we got here?
I am going to start on the balance sheet here, kind of not necessarily where we normally start, but one thing that we've talked a lot about with the airlines is COVID was a very difficult time for them. I mean, we look at saying they had to take on a lot of debt. And I'm going to scroll down for our viewers here. You can see the total debt for this company has climbed from 25 billion in the first quarter of 2020 to over 40 billion, or excuse me, nearly $40 billion now. I mean, that's a lot of debt to take on in such a short amount of time.
Chase, can we just call it $40 billion? I mean, we're only short, what, 289 million. I think we can call, when you talk about 39, 40 billion, we can call it 40 billion.
Yeah, it's 40 billion. We'll call it about 40 billion. And the other thing too that investors have to understand, we talk about this a lot, is shared dilution when it comes to investing. And what I'm going to point out down here is you see again prior to COVID, the first quarter 2020, there was about 422.9 million shares outstanding for the company. Fast forward to today, there's 641.4 million shares, we'll call it. I mean, that's an increase of over 200 million shares. So they increased it by what? What's that? More than 50%? I mean, that is
That's
a
a 50% increase. And the thing that investors have to realize, that's a 50% increase in your shares. Won't equate out exactly right, but it could almost be a 50% decline in your earnings per share going forward, because you have so many more people with their hands in the pot trying to get a piece of that pie. Pie's same size, but there's a lot more hands in that pie right now.
Yeah, absolutely. And now we're going to kick it back to the company comparison where we normally start when we analyze companies. But I just thought that was such an important place to kick off looking at the balance sheet.
Jason, this is so important for people that we do this because this try to point in the right direction. We're looking for things that, either this company is going to be like, don't even think about it. There's so many negatives with it. Could also be that, what, it looks pretty good. Let's go ahead and kind of maybe do some more research on this because if numbers look good, we can probably do that for you. So, uh, starting off with the very beginning, which is the PE ratio. Everybody knows PE ratio is price earnings. This is for the last 12 months, not material for the company, not material for the industry, which means that there are no earnings over the last 12 months. We do see price to sales is 1.1 versus 2.1. So that's a positive. You are paying less for the sales of American Airlines than the entire industry. The next two things we look at, which are price to book value and price to cash flow, both of those are not material, which means they have no book value of the company. I think on the balance sheet, we saw negative equity. I think it was 7 was it 2 billion? I think it was. We're talking about billions. So yeah, it must have been 7.2 billion negative equity, which means your liabilities exceed your assets, and also no cash flow for American Airlines either. But the same thing for the industry. They have no book value. They have no cash flow. So the whole industry, in my opinion, is really in a very difficult spot going forward. Now, let's look at things going forward. Now, no surprise here. American Airlines, I don't think maybe Southwest is paying a dividend, but no dividend from American Airlines right now. And look at these revenue numbers. And we know this is over the last 12 months, things are difficult, but it's a big hole to climb out of. Year over year, their sales are down 70.6%. The industry was down 69.9, so we'll call it about the same. What is not the same is the earnings per share year over year for the last 12 months. American Airlines earnings were down per share 720%. Yes, I'm rounding from 719.85. And the industry did a little bit better. Their earnings, and sounds terrible, their earnings only declined by 536%, which was a not as bad of a decline as American Airlines experienced. Here's where we get in the problems. And Chase, I've been doing this for 40 years now. I like to be safe with my money. I don't want to invest in companies that they're here today and they go bankrupt tomorrow. Looking at the financial strength or the balance sheet of a company like American Airlines, we see the current ratio is 1.04 versus 1.1. That's okay. It shows the company has liquidity to pay off their short-term debts. What I don't like seeing here is the debt to equity is not material versus 537 for the industry. And we already spoke about that they have a negative equity. So therefore, you're not in a good financial position. Creditors could come in and close down American Airlines because they want their money and they just don't have it. They have no place to go to. And talk about trying to buy more, borrow more money. I don't think that's a possibility this far in the hole. So things have to go exactly right, every single thing going forward for American Airlines, or else we could see a bankruptcy. I'll say maybe 12 to 18 months down the road. Looking at return on equity, well, no equity, so you can't have return on it. The net profit margin, very important. And just when you're investing, kind of break this down. You want to buy a business that's making a profit where they sell a dollar product and they make maybe 10 cents on a dollar. Well, look at American Airlines. For every dollar they bring in over the last 12 months, they lost 79 cents versus 80 cents for the industry. So about the same there. And we know that's over the last 12 months. They got a big hole to dig out of. I don't know if they can do it or not. Can they make a profit going forward the next 12 months? We will see. Also important for any company that has receivables, which they do, you want to see how fast they turn over those receivables so they don't become bad debt. American Airlines is doing a good job here, 12.9, better than the industry at 9.3. The inventory turnover always kind of difficult on airlines because we're actually talking about the people or the inventory, about a 4.8 turnover versus 8.2. So they may need to get more people through on their planes to really keep that inventory or those sales and those earnings keep flowing forward.
Yeah, and the other thing that's going to be interesting is obviously things were closed last year, so the revenue and the earnings. I mean, you're going to see you saw such a negative that what starting this year, it's going to be crazy what the percentage gains are going to be over the last 12 months.
Yeah.
It's going to be very interesting, but it all comes again down to what you're paying for that. I mean, you go, wow, this company has grown at 200% on its sales and it's fantastic, but you know, I almost think that you're going to have to compare 2021 oftentimes to 2019, 2018 to really get a just comparison for how that business is doing. I mean, 2020 is going to just be, I mean, it was a wash in the pan. It's such a one-off type scenario. It's hard to compare those data points. But looking at here, some numbers on American Airlines, you see the current price is $21.51, 52-week high for the company, $26.09, and the 52-week low, $10.63. The problem I have with this business, I go out to December 2022, I see the company's estimated to still lose 3 cents. We take 16.6 as our forward multiple, and we have to apply that to positive earnings. So with no positive earnings, I can't even get a target sell price. But you can see here, I mean, the range on these estimates, it's just wow. I mean, the high $2.84, and the low is a loss at 3.89. Very curious to see how this all plays out for the airlines in 2022. I mean, that's a huge discrepancy there.
And Chase, we can point out, if you go a little bit further, December 2023, they do show earnings or pre-exempt earnings of $2, what is that, 27 cents. 14 analysts, a little bit less, but still that large range. So don't get excited like, well, yeah, but they're going to make money in 2023. Maybe, maybe not. We don't like this large range of the earnings from 14 or 20 analysts. The tighter those estimates, the better it's going to be. So they have what in 2023, somebody thinks they're going to lose 81 cents. So be careful about just looking at one number and not understanding that number.
Yeah, I mean, it's so important. And the thing that I find so interesting with American Airlines, I took a look here, and the stock's actually only down about 20 to 25% from its pre-pandemic levels. And wow, 25%, that's a huge decline. I mean, really, for what the airlines have gone through, that's not as substantial a decline where I think it should be trading, especially you bake in, again, all that stock that was issued, all that debt that was issued. I mean, you look at a market cap, which is the stock price times the shares outstanding, I'm almost willing to say it's right near that pre-pandemic level, if not higher. Plus the enterprise value, which bakes back in that debt. I mean, this company is worth more essentially now than it was before the pandemic. I don't see any case that you can justify that would make any sense to have those valuations make sense.
And Chase, I kind of wonder, I mean, if the pandemic didn't come along, perhaps they could have filed bankruptcy because maybe in a weird sense, the pandemic actually saved the company because obviously they got more money and so forth. But I still don't see how they can keep on this path for any length of time. One thing I did look at, I know the famous meme stocks looking for shorting companies. I thought, well, this is companies in such dire straits here on the financial statements. Maybe meme stocks are in there, but the short shares are only about $81.1 million percent of float. It's about 14.2. So I don't think that's going to qualify for the meme stocks, or they call it the Reddit stocks. You're younger than me. I forget what they call it, but it's just like I don't see that helping the shares on this stock. Stocks like this worry me.
Oh, yeah, I mean, absolutely. I don't think you should be flying with this company. I think, I mean, maybe you can fly with them. I've heard decent things about when you fly with them, but in the portfolio, I don't think the stock flies.
I actually think a better investment than buying the stock would be taking the flight and getting the miles for the rewards. Well, I was gonna say that's something you can lock into the bank, but then what happens when the company goes bankrupt? I do believe all those reward miles go out the window.
Yeah, and I did want to circle back too. You talk about, did COVID kind of save this company from bankruptcy? I mean, the federal government had to step in and kind of extend a lifeline to a lot of these airlines. I think if we didn't have COVID, American Airlines wouldn't have gotten that lifeline if they did hit troubling times. So it's a good point, and I don't know. We'll see if it fixed their fate or if it just kind of expanded the amount of time that they can survive.
And let's kind of just inform investors that keep in mind when you are investing, buying stocks, it's not a gambling chip. You are buying a small piece of a large company. Remember that because you have ownership, not just some gambling chip.
Yeah, absolutely. Well, I hope this video helped, and thank you again for joining us today. If you like the content, please be sure to subscribe to our YouTube channel for upcoming stock videos. Again, it's our weekly stock analysis, so we do this on a weekly basis. Always going to be different companies there. This should not be used as investment advice, as it is for informational purposes. If you are interested in learning more about our investment philosophy, visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com. Thanks again, and we'll talk to you soon.